Good afternoon. Today is Monday, November the 7th, and the time right now in Singapore is almost 2:30 in the afternoon. By now, you will have realized that we have seen the Federal Reserve actually hike rates by another 75 basis point, bringing the U.S. Fed rate now to 4%. And there is a lot of talks that the Federal Reserve is aiming for at least 5%. That means to say that for a time being, there will be continued raising of interest rates all the way to the year end. So the market was expecting some kind of pivot by the Federal Reserve, but obviously that's not going to happen because during the press conference in the aftermath of the FOMC meeting and after the rate hike, the Fed chairman has actually dosed any speculation that there's going to be a pivot. So for December, which is going to be the last FOMC meeting for this year, market is again getting ready for another massive rate hike. Okay. On Friday, we have actually seen the non-farm payroll, which is a mixed bag. Although the unemployment rate has inched up by a little bit from 3.5 to 3.7, however, the number of new jobs created was more than what the market expected. So it was a bit of a mixed bag. So there's nothing much we can see from this particular data set. What the market did on Friday was the first rally and then came back down and then closed on a strong note. So as far as Dow Jones is concerned, we can see that the Dow Jones particularly has been doing very well over the last couple of weeks. This month itself, last week, of course, was the first week of November. The market actually registered a marginal new high above the October high, which in turn was actually closed above the September high. So if we look back at the Dow Jones price action, we know that as the end of September, the market was actually at the year's low for the Dow Jones. So by the end of October, the market has reversed and regained back all the losses seen in September and then a little bit more because October actually closed above the September high. And then November actually have a marginal high above the October high. That means the market has basically turned around. Okay, so if you look from this perspective, it means that the Dow Jones itself has a bullish bias right now, and it is quite logical because I have been maintaining the fact that we can see this global capital flow moving into the States purely because the Federal Reserve has been hiking rates aggressively for the last 6 months, resulting in a lot of capital moving into the United States. Okay, and this money that have moved into the States has been, I speculate, for quite some time now, the money is parked in blue chips. Okay, it means Dow Jones. And Dow Jones, as we all know, is the bluest of blue equity index in the US equity market. So when we see the Dow Jones actually rises more than the other corresponding index, like the S&P 500 or the Nasdaq, that means something is different. The dynamics of this rally from the September low is a little bit different for the Dow Jones compared to the other index. Definitely, the market in the Dow Jones wants to go up because all the money is parked in the Dow Jones itself. And if the war in Ukraine escalates, more capital is going to flow into the United States. Why? Because if you look back in World War II, this is exactly what happened. If there's war happening in one continent, people with the wealth want to protect their wealth. They will shift their wealth and all their capital into another safe haven, and that current safe haven is in America. So the money is moving into the States, helped by the fact that the US dollar is so strong. Okay, so added more reason why this capital inflow into the United States has found its way into the US equity market, in particularly the blue chips. Okay, now when you see that and when you compare that to the S&P 500, now this is the S&P 500 4 hours time frame chart. You can see the market has unfold, okay, from the September low, from the October mid low to into a three-wave rally to 3,911. And this is followed by a very sharp drop on Friday, on Wednesday and Thursday, followed by a somewhat of a rebound on Friday itself. So you can see that this market has already fulfilled a three-wave rally. So because the structure in the Dow Jones suggests that there's going to be more gains going forward, it may actually result in the S&P 500 and the Nasdaq evolving into a more complex corrective rebound. Okay, so I do like to believe that because of the bullish bias seen in the Dow Jones, it may actually cause the other two index, especially the S&P 500 and the Nasdaq, to actually struggle higher. Okay, but the money is actually in Dow Jones. If you want to go long, I think it's quite an obvious choice. Blue chips, or if you're trading the index outright, then maybe the Dow Jones. Okay, so the money for doing this counter trend is in Dow Jones, not in the S&P 500, definitely not in the Nasdaq 100. Okay, so by and large, I think the market, if you take out the November high at 3,911, it may actually challenge the September high at 4,119. I have a target of 4,118. So basically, it falls within this bracket of prices here. Over in the Nasdaq, we can see the Nasdaq rebound has been pretty weak. Yes, it has completed a simple three wave. It did not quite make it to my target. My target is 11,660. Okay, the market top out at 11,681. So now the market have a very, very sharp drop in the second half of last week, and now it is struggling to find a base for it to propel higher. So it may actually continue to struggle higher, but like I said, the momentum is not very obvious in the Nasdaq 100. If the market actually exhausts itself and want to come off, I think the choice is quite clear. I will be selling, or I would prefer to sell the Nasdaq. Okay, or you can do something very different. You can basically buy the Dow Jones, sell the Nasdaq. Okay, so this is what you call an inter-commodity spread. You can actually use it to not take an outright risk. Okay, so long as the Dow Jones continue to edge higher relative to the Nasdaq, I think this trade will work out. Okay, over in Asia this morning, we can see that in Asia, maybe I'll show you the weekly time frame first. Okay, the weekly time frame actually resulted in an outside bar, which you have not seen in the Hang Seng Index for many years. So this is a very bullish development. Remember last week, there were two mysterious tweets that actually was circulating in the Chinese Weibo, which is their equivalent of, let's say, WhatsApp. Okay, and the rumor was that the central government is likely to lift the zero COVID policy. That causes the Hang Seng to spike up. Okay, not only in the Hang Seng, it also caused the market to run up in all mainland equities. Okay, so that momentum did not end. Friday, there was again another retweet of the same information suggesting that the central government is going to lift the zero COVID policy. Obviously, over the weekend, we have hear from the officials saying that there is no such policy in place. So maybe the market was expecting the price to come back down. But this morning, Hang Seng continued to charge higher, purely because there was an outside bar. Okay, regardless what is the reason that causes market to have an outside bar, I think the algo programs would have actually recognized this reversal pattern. Okay, so from here going forward, there is the possibility that the market may actually since find a bottom at 14,600. Okay, so we will have to watch over the next few days and weeks whether it can sustain beyond the October high. If it goes and close above the October high, this will be the first concrete evidence that the bottom may be in place. Then of course the high will be 164.2. Okay, we want to see the market close beyond 18,164.2 by the end of this month. Okay, that will be the most concrete answer that we can look for. Over in the Shanghai Composite Index, you also see something very similar. On the weekly time frame, we also have a outside bar. Okay, this is what we call a bullish engulfing bar. Very powerful bar. But the extended rally is not as fierce as what we saw in the Hang Seng. Okay, so yes, the market is have a marginal high compared to Friday, but it is not as aggressive as what we have seen so far in Hong Kong. Okay, so we will have to see how this market actually plays out. And as far as the October high is concerned, the Shanghai Composite Index is a lot nearer to overtaking the October high, which is currently at 3,099.91. Okay, so it is a lot easier for this index to cross over the October high, and this we will take the clue from the Shanghai Composite Index to actually see if there's a possibility that the market are actually stabilized and going for a technical correction. Okay. Now, when we look at the dollar versus the yen, dollar versus the yen has actually moved to a high of near 152. 152, of course, happened a couple of weeks ago. Okay, we can see 152 was where the market come nearest to actually achieving before it came under intervention by the Bank of Japan. And the market went up all the way to 145 before it rebounded back to 149. Okay, 149. Near to 149, 148. See, this one. Yeah, 140. Let me see, 148. 82. Okay, so from here I think the market is doing a larger degree three wave, and now the market I do expect some kind of pullback to go and retest the first initial intervention low, which is current which was then at 140.43. Okay, this is the first intervention low. There's a very good chance market may unfold in a larger three wave correction, maybe to 142 to 140. So this is a good price range for us to consider re-establishing long position, because the fundamental for the dollar strength still is very much in play. Okay, so buying dollar is still the right thing to do. Over the sterling versus the dollar, we can see because the dollar is doing a correction right now, it does give the other major currencies a chance to actually rally, and we can see quite clearly in the sterling. Sterling is unfolding. It is still unfolding in a larger degree three wave, which may actually target 120. And maybe even go up to 123.70. Okay, so this is a bracket of price which I'm actually looking at, and if you look at this is the August high, 12293. Okay, there's a very good chance it will challenge this high one more time as the market unfolds to the upside. Okay, but this is a technical rebound, not a currency strength. The dollar is still the preferred currency to go long, okay, over the longer term. Euro dollar also managed to recover, but you can see this recovery is also unfolding in a three wave. I think it's very likely it will unfold into maybe two sets of three wave. Okay, if that's the case, there is every possibility it may actually go up to 102. Right now, it has already hit its parity target, okay, which is at 1.0085, which it already did. Market went up to a high of 1.0094 on October 27. Okay, now the market pulled back in three wave. Now it's getting ready to present another set of three wave. We are the first set here, 1, 2, 3. Okay, now maybe the market will do another 1, 2, 3 here. Okay, and hopefully it can target 102 to 103 levels. Over in crude oil, we can see that the market actually have a good run on Friday. Okay, this recovery from $76 actually was very robust. It's clearly a three-wave rebound, and if this is a three-wave rebound, there is a scope for the market to at least go up to $98 per barrel. Okay, currently it's above $91 per barrel. Okay, of course this morning we see a market pull back a little bit from the Friday's high, but by and large we can see that this market wants to go up, and the August high is $97.66. I think that level will be taken out. The more relevant price point will be the July high at $101.88. This is where I think the market is going to gun for. Over in precious metals, we can see that gold itself has a good run on Friday. Gold was at one stage teetering on going under, but market, you can see on this 4 hours time frame, there is a triple bottom here. Okay, so triple bottom is also a very bullish reversal pattern. Some people have been saying this could be inverse head and shoulder. Yes, it does have some kind of semblance to a reverse head and shoulder, but by and large you can see that the strength in precious metal has been aided by the fact that the dollar is now doing a technical pullback. So when the dollar is too strong, precious metal price cannot go up. Okay, and now the dollar is easing off, so it allow those asset class that has not been doing well because of dollar strength now have a chance to actually reverse the trend. So we can see it in the precious metal market in gold. Okay, so gold from around $1,615 has actually rebound back to above $1,681 on Friday. This morning we see a bit of a pullback, but by and large it does looks good for the market to go back and test this high here, which is the September high. September high is was at $1,735. Okay, maybe the market will go back to $1,735. Okay, this it will be the range in which it's trading. Still a bit of a room left, but the market for precious metal actually is centered on silver more than gold. Okay, you see the gold structure is so much more powerful Gold at one stage went up to above $20 per ounce, and it does look like it may sustain and go higher. Okay, near term, I think the market has a chance to go up to $21.64 to $22.60. This bracket of prices, if it does, that means there is also a chance that it will also challenge the May high at $22.45. Okay, the background story for silver is this. Okay, we know over the last few months the physical market in London has been very, very tight, and most of the transaction on London bullion market ends up in delivery. Okay, but because supply is so tight, there is not enough supply to satisfy those people who wants to buy physical. So what happened is that we are seeing a shift in attention by these speculators who have failed to buy in London, and now has shifted the focus to look at the COMEX, both silver and gold futures. Okay, and each year the December delivery has always been the most actively traded contract month. Okay, and this month will end up in the end of the December contract. Okay, so this month we can see there's a bit of an option activity going on in the silver market, because the stocks in the COMEX warehouse is not a lot, because most of the delivery are done in London and done in either the GLD ETF or the SLV ETF. Okay, very little actually end up in delivery in the COMEX silver or gold, but you can see the attention is shifting. I suspect a lot of people have been selling precious metal market. Now we can see speculators are coming in. I think they have the intention to hold this long position all the way until expiration and then demand delivery. And that could be a problem, because there is just not enough stock in the COMEX warehouses. So this is causing a short squeeze. I suspect a short squeeze is currently unfolding. And if this is the case, silver prices may go even higher, and that may also rub off on the gold prices and basically take the entire precious metal market space a lot higher than it is right now. Okay, so do watch out for this possible development of a short squeeze in silver market. Over in the crypto space, we can see the crypto prices has actually been very robust. It has been edging higher. We can see the Bitcoin from a low of 18,000 now is on Friday actually traded to a high of $21,500 thereabout. And yes, this trajectory does appears that to suggest that we are going to see higher prices going forward. Where is the next target price? I think very obvious. The market is going to gun for the September high, which is $22,877. Can it go there? I think there's a very, very high likelihood that it will do that. Okay, Ethereum is even more constructive. You can see the rally in Ethereum is a lot more stable than what we see in the Bitcoin. The low 1,175 was actually traded in mid-October, and as of last week, we can see on Saturday the market went up to 1,681, and this is very robust. If the market does pull back, I think the October low at 1,480 will hold, and the market will actually attempt the September high at 1,790. Okay, so we have a bit of room left, and I like this structure here. But the one that actually caused the market to go even higher is this particular coin called the Binance coin. Now, Binance coin has been very, very stable. From $256, it went up to $361 over the weekend, and it does looks like it is not done yet. Where will you go? My initial target is $362.57. Very, very close right now. So maybe right now the market will go into a bit of a technical pullback. Okay, if it does, once it consolidates, I think it will challenge the May high at $414. Okay, beyond the May high, the September's has many, many levels in which you need to conquer. The ultimate one will be $460. So there is a lot of upside left in the Binance coin. Ripple is a bit of a letdown, because Ripple, the litigation case between the SEC and Ripple Lab has not come to any kind of official verdict. So the market is basically treading water. But you can see the trading range has actually been narrower and narrower and narrower. So this is not a coin you want to be in, because there is no major driver driving this coin here. Okay, do you dare to go and buy at this current level? What about selling? I think it's best to step aside and just watch. Okay, this is a meme coin. Okay, which is Dogecoin. We all know the Elon Musk favorite crypto coin is this particular coin here. So the fact that Elon Musk has successfully bought over Twitter, that caused this coin to have a bit of an interest. Okay, but this coin is a very, very weird coin. It's not so much of any fundamental. It's just a meme coin. Okay, so but structurally it does look like it may have enough room to consolidate. After all, this morning it tested the October low at a 0.1113 and managed to hold, and this could be where it formed a base to propel this coin higher, even beyond the November high of 0.1588. Okay, so top side, I think there is every possibility it may go up to 20 cents or even 21 cents. So do watch out for this particular coin. I myself have no interest in this coin because I feel that it's one of the weird altcoin that is in the market. Okay, so this is all I have for you today. Tomorrow, let's continue to watch out for the midterm election. That is tomorrow. Tomorrow midterm election, the result may not be out tomorrow. It may be out on Wednesday morning. So regardless of which party wins, I think nobody will be happy. And if we now remember last week, there's one very one headline grabbing news, which is the Speaker of the House, Nancy Pelosi. Her husband was at home, and he was attacked by an intruder, and the guy actually whacked him with a hammer. Appears that he managed to recover, but we can see that the polarization in the US politics is so bad now that if either party feels that the other party has been not being fair in tomorrow's election, the sentiment may actually spill out into the street. What we may actually see going forward, these supporters of whichever party may go out into the street and start to get violent. That will means the US may actually descend into civil disorder. So if that is the case, then of course it will spill over into the equity markets and all the other assets. So do watch out for the result of tomorrow's election. It could be game changing. Okay, guys, that's all I have for you for now. I'll see you guys tomorrow. Bye-bye.